Ashwini Agarwal is with us, founder and partner, Demeter Advisors. Ashwini, good morning. Good to have you with us here. Thanks for joining us. This IT question is the big question without answers. So everyone is nervous. No one really knows. I mean, how can anyone know, right? But obviously, because you are, it looks like the upside for now perhaps maybe capped, and downside maybe limited but uncertain. So it's like sell first and then try to figure it out. Is that what's happening, Ashwini? And what's your advice?
So, morning, Prashant. Thanks for having me here. A very pertinent question. And I think the question that all of us are struggling with is that obviously the sector is being disrupted. Now, disruption, the end game is very difficult to predict. It's possible that the application of AI might yield business for a few companies. It's possible that their margins expand, their revenues grow at a slower pace, but they have to make do with fewer employees. All these permutation combinations are possible. But one of the things that many of us who've been around have learned is that when something's getting disrupted, don't stand in the way. Figure out, stay away, let the chips fall where they may, and then figure out, if there is something that you want to pick up from what's left. At this point in time, it makes little appeal to me to be in IT services because we really don't know the way forward. And that's, I think, the uncertainty that we have to go through.
Citi's released a report about 2 days back, and they're saying that why this tech cycle is different compared to the cloud and the SaaS cycle. Because they're saying that unlike the move to the cloud, which was lift and shift that created massive new work for the Indian IT companies, this AI shift has unique challenges. One, this time IT is the larger company. They are the incumbents and not the challengers. So the size is a problem. Two, cloud impacted only the infrastructure, but AI's impact is far more pervasive. It's impacting the entire business, the business, the operating model, the way the company makes revenues in terms of man hours, etc. And three, they're saying the shift to cloud immediately created very large new work for the Indian IT companies, but this time the work related to AI is very small. Pilots are running, they're not very large, and they're not able to offset the deflationary impact. So they believe this time, the tech cycle is different for the Indian IT companies compared to the prior cloud SaaS cycles. So, Ashwini, no holdings, no recommendations, even mid-cap IT companies, which have done very well in the last 5 years, complete avoid on the sector?
For the moment, that's what I would do. I think there would be a few players in the mid-cap space that might benefit from the cycle. But, it's best to stay away for now for the simple reason that we don't know how this will evolve. Obviously, there will be a few winners out of what is happening. And my sense is that the GCCs will be less impacted than pure outsourcing companies. But there's no way to invest in the GCCs as a local investor. So, that's the conundrum that companies that are internal to the client will probably do a lot of the heavy lifting on the AI, whether it is in-house LLMs, if somebody is building them, or it is application layer that is getting integrated into AI. So my sense is that if we don't know how this will evolve, and all the points that you made about the report from Citigroup are all valid, so just stay away would be my sense for the moment.
Ashwini, it's a larger conversation, right? I mean, if this is really going to happen, the fact that we're only talking about IT services is because, that is what these companies, I mean, these large language model, all these companies are focused to chosen to focus on initially, right? Which is software. But it's not going to be just software, right? It's going to be, but that's, I guess, it's a bigger, broader conversation. And it is such a cognitive dissonance, right? Because if you try to read and see what is happening, and everybody's saying, well, this is coming and that is coming, but we live day to day, and you've got to get through day to day. So it's a big disconnect in that sense, in one's own mind, for those of us who are following it.
So, Prashant, the way I would do it is that focus on the old economy at this point. I mean, yeah, I think
my question was focus on companies drilling for oil, digging for copper or coal, or I don't know, hospitals. Yeah,
stuff that people who are making the widgets. We will still need the widgets. We will still need the nuts and bolts. And I think for the moment, the idea is to focus there. And you're right. I mean, we are going to go through a big disruption over the next decade. I don't know how many jobs will be lost in which sectors. I mean, like some people have pointed out that wealth management, asset management, law services, legal services, all of these businesses might be at risk in some form or the other. And, we will evolve. I mean, just like the typists went out and stenographers went out, in the previous generation, and it was taken over by somebody else. And travel agents, by and large, have become irrelevant or less relevant, let me put it that way. So, business evolves, and we have to look at what is for sure, which is going to survive for the moment when we are investing in the markets. Also, in the mid-cap space, and especially in IT, valuations are still very expensive. So that's also something that bothers me.
Okay. Hi, Ashwini. Good morning. Good to see you, Ben. So let's look inward then. Domestic-facing themes, right? What would be your top one or two themes that you're looking at? I have my ear to the ground, and at least the old economy sectors, be it cement as well as steel, the first 45 days haven't been so bad. In fact, it's been quite encouraging, post a softest showing that we saw in Q3. What's your view?
So I don't know about cement or steel in specific. I mean, we've seen some green shoots there, and historically, cement has been a big disappointer because typically supply has always run ahead of demand. But steel, yes, one is sensing that that sector has more legs to it. Given how strongly we feel about investments picking up in India, and how steel intensive it can be. And, prices did bottom out sometime towards late 2025. So my sense is that steel might have more legs to it. In addition to domestic economy and, core basic manufacturing business, I would also say that exports is a good opportunity. I mean, at the end of the day, the export sector went through a huge uncertainty, especially when it comes to goods. In the Indian context, and I'm glad that we've seen the end to that uncertainty, at least for the moment. And I think that might be another area which might benefit. I also think that the changes that have come about in India in terms of treaties with the European Union, treaties with the United States, and various others, I think it is a very big shift in the way we are painting the economic and competitive environment for Indian companies. And therefore, one has to look out for businesses that are competitive and will survive in the new world. I also think that this will force a lot of domestic companies to become more competitive, which I think is welcome from a medium-term perspective. So for the moment, banking stocks look fine. I mean, financial services by and large look okay. I think domestic manufacturing looks okay. You have to be careful about valuations. And I think the opportunity is in the mid and small cap space, where price destruction has been quite massive, and there has been reasonable time correction of 6 quarters. So there, I think we are starting to see some value emerge.
Absolutely. Ashwini, stay on, and you might want to listen to a picks and shovels company, if I can use that word, somebody who works in the real world, building physical stuff are coming up next. So not immune, but I mean, shielded from some disruption. I'm talking about the BEML management, who we're going to speak to next. Thank you very much, Ashwini, for joining us. But